Well, the S&P 500 and the Dow had their biggest one-day drops in a month as Italy's political crisis sparked concerns about the stability of the Eurozone. But all eyes on U.S. banks. They were hit hard yesterday. Granite Shares CEO Will Rhind is joining me now. Well, welcome to the show. That was the worst performance that we've seen in some time. In fact, all 69 of the S&P 500 banking stocks fell. Big move for that sector. Is this just worries about the Eurozone, or is there something else going on here?
It's primarily worries about the Eurozone, but yes, there's something going on here as well, which could be a much bigger factor, and that is that if the Eurozone situation causes yields here to drop further, and we saw a big move in the U.S. 10-year bond yesterday, then of course yields declining as opposed to yields rising is bad news for banks, and that's primarily the reason why the stocks got hit yesterday.
Well, we also got downbeat guidance from J.P. Morgan Chase and Morgan Stanley. J.P. Morgan's corporate and investment bank chief said the bank's second quarter market revenue could be flat compared with a year ago. And the co-head of Morgan Stanley's wealth management division said, hey, activity is slowing. Is this somehow a bad time to be a bank?
Well, it was actually a pretty good time to be a bank up until some of these latest quarterly earnings reports, and particularly, with a rising interest rate environment, a lot of investors expected, I think, better results and thought that in that kind of situation, banks would achieve a higher level of profitability, and certainly a lot of investors have been moving back into the sector. But as you rightly noticed, some of the flat trading profits that were reported, were not great news, and I think that's a function of this low volatility environment as well as some of the other sort of reports of declining sector activity.
Well, you would think it would be a good time for the banks as interest rates have gone higher, right? They make more money on their loans. That's good news for the banks. We also see a pretty good regulatory climate, right? This is a sector that is good for individual investors. It's a place that individual investors like to be. Should they continue to invest? Should they invest more at this time?
Well, I think people need to be cautious about financials at this stage. And I think that the view on financials primarily is determined by a view of rising interest rates. And I think this latest episode that we've seen from Italy, sparks a crisis of confidence, at least in the short term, about how many rate hikes the Federal Reserve will implement this year. And of course, if it's going to be lower than market expects another 3 rate hikes this year, then that's probably not good news for banks. I think investors need to remain cautious about the sector.
And it was all playing out in the share prices yesterday. J.P. Morgan Chase was down 4.3%. Morgan Stanley down 5.8%. Very big moves indeed. Is there another sector you like better if people should be cautious, as you say, about the financial sector?
Well, I think from our perspective, one sector which continues to do very well is commodities. And, particularly on the back of Italy, we saw investors moving into safe haven assets such as treasury bonds and gold. We still like commodities as an asset class, and we still like gold as an investment in this kind of environment where we're seeing heightened volatility and weakness in the dollar.
Well, lots of ideas there for investors. Thanks for coming on today.
Thank you.